But you know how they tip today? They buy some gifts, like virtual gifts, and they send those gifts to the creator. And there's actually a couple fundamental reasons behind it. But one of the reasons is it's actually impossible to do micro tipping today with credit cards because these are so expensive. The whole virtual gifts as a way to tip is effectively a layer 2 if you think about it.
Yeah.
It's a layer 2 for tipping.
Hey everyone, this episode is brought to you by Namada, the shielded asset hub rewarding you to protect the multi-chain. So not only can you protect your own data across any asset and any chain, but you also get shielding rewards for strengthening data privacy protections for everyone. So you can check them out at namada.net and follow their mainnet launch. Stick around, you're going to be hearing all about them later in the program.
All right, everyone, welcome back to another episode of Bell Curve. Before we jump in, quick disclaimer, the views expressed by my co-host today are their personal views and they do not represent the views of any organization with which the co-hosts are associated with. Nothing in the episode is construed or relied upon as financial, technical, tax, legal, or other advice. You know the deal. Now, let's jump into the episode.
All right, everyone. Welcome back to another episode of Bell Curve. Today, I'm joined by Qiao and Imran of Alliance. Guys, welcome. And Good Game, I should say. One of the best podcasts out there.
Thank you
for having us.
Yeah, thanks for having us.
For listeners, this is actually the third time we are attempting this podcast. We tried once before. We actually tried to do it in person in the Blockworks office, and I drastically underestimated how difficult it would be to record in person. And now we're going to get a studio going. So maybe we can do some, future Bell Curve Good Game crossovers in person in New York.
Yeah,
that'd be a lot of fun. Yeah. All right, but today what I want to talk to you guys about is consumer investing and apps writ large. I posted a little while ago on Twitter, who are the best investors in this space, and basically everyone just commented, you guys. And so I've got a list of questions for you, but maybe just to begin with, I would love to get your guys' perspective on this meta of infra exhaustion and apps. And I think if I had to steelman both sides of it, it would be, hey, we've had crypto's now been around for a number of years. And we haven't really had many apps. We've had a lot of infra tokens, but they tend to be low FDV or high FDV, low float tokens that kind of gets dumped on retail, and they don't really have any customers and no one understands them. And we're just sick of this, right? We're sick of people pontificating about auctions and TEEs and all of this stuff. Just give me the apps. And on the other side, it's like, well, actually what we're trying to build here is an alternative financial system. And these are infra picks and shovels businesses that take a long time to get created, but ultimately they're going to be worth quite a bit. And it's actually kind of mid-curve, to be this like focused on the apps and just give it time. Where do you guys sit on this entire meta?
Let me give you an anecdote. I was talking to one of our founders in the current batch who's building deep infra, but an infra project that's actually genuinely interesting. I won't get into the details of the infra or the project he's building, but he told me that we talked about why there's so many infra projects today, and he said it's because infra is easier to build than apps, and his reasoning is that infra today in 2024 is relatively a closed form type of project, meaning it's almost a purely engineering project, an engineering effort. Whereas apps is way more than engineering, right? Like, in fact, there's a little bit of engineering, but really, it's really about understanding users' consumer psychology. What is exactly the pain point that they're feeling? So, I mean, this coming from an infra builder just tells me a lot about where we are. And honestly, I agree with him. Today, I think it is actually easier to build infra, to launch a chain, for example, than to build a consumer product that millions of users use, which wasn't the case a few years ago. A few years ago, it was actually really hard to launch a new chain. Like, there were actually true innovations in terms of scalability, for example. But things have changed.
What's also funny is even with the outcry of infrastructure and consumer, we're still seeing infrastructure projects being announced. And so that was an interesting signal. The other interesting signal that I've realized was the fact that a lot of our founders that are building consumer are pitching crypto VCs, but the questions that they're asking makes them believe that they don't really understand consumer. And so I do believe that a lot of the crypto VCs right now are more on the infrastructure side in terms of diligencing startups, and I don't think they fine-tuned themselves to start diligencing crypto consumer projects. So, obviously when you're talking to a bright founder or startup, you, for the most part, I feel as if VCs are leaning negative versus, staying more positive and trying to figure out a proactive way to fund startups in crypto. And I think Qiao mentioned this on our last pod too, which is a mindset issue as well.
Yeah. So I feel like one of the, I see a lot of VCs sometimes get, I don't want to say defensive about this, but it's like, look, guys, I can only take what the market is giving me. Most of the founders that I speak to that are, have the best track record and expertise, et cetera, what they want to build is infra products. And I'm pretty sympathetic to that idea, right? Like you're kind of, the only thing that you can really work with is the ecosystem of founders that you have coming to you. But what I just heard you say there, Imran, a little bit is like, well, actually, maybe, we've been building infra projects for a long time. And it would make a lot of sense to me if the VC ecosystem adapted to being able to diligence that or look for that, or you build up teams, full of experts that are really good on the infra side of things. And there could be this massive hole around, how do I actually build a product with distribution, right? There's an enormous amount of there's a huge amount of focus on infra and auctions and mechanism design. And that's what, everyone who gets sort of, nerd sniped. It's all about that kind of stuff. And you never hear anyone talk about go to market or how do I actually get a product in the hands of users? You know what I mean?
So it was funny because we had a VC that asked a question to one of our founders about like, what is their TikTok strategy? And like, and they weren't very happy with the answer. And it just kind of leads me to believe that I think VCs are trying to figure it out. I'm not saying, not trying to be negative here in terms of how they diligence startups. I just think it's a newer area for all of us. And, I think they just need to get more acclimated with how consumer is going to work.
I've got a question for you guys, because people also talk about the relative valuation of something like infra versus apps. And, in one sense, I've heard the argument that, hey, maybe it actually just makes sense that these infrastructure businesses are picks and shovels businesses. They're really durable, and maybe they do deserve a little bit higher of a valuation. But I guess what I would say to that is I completely understand that. I understand how infra businesses can be really durable over time. But your customer as an infrastructure business ultimately is applications, right? So help me, square that circle. It doesn't really make sense to me, actually, the idea that infrastructure businesses should be valued really highly if there aren't a ton of apps, because the customers of the infrastructure providers are the actual apps themselves, right? How do you guys think about that sort of relative valuation question between apps and infra?
I mean, there's a couple points worth mentioning here. One is that historically, empirically, in the last, call it 30 years of technology, it turns out it's the apps that ultimately capture the most value compared to the infra. And this was very evident in the dot-com bubble. In the dot-com bubble, it was the likes of Intel and the picks and shovels of the internet, the cable companies, the internet cable companies, the chip companies that were among the highest, most valued companies in the NASDAQ around the year 2000s. But 10 years later, 10 to 20 years later, it turns out it was, products that are consumer facing, right? Like the Amazons of the world, Apples and Google and Facebook of the world. Obviously, right now there's like this whole new wave of infra, which is NVIDIA and the likes of, and Taiwan Semiconductor Company. But towards the end of the AI wave, I think we're probably going to see the same thing, which is the AI user-facing companies are going to overtake the AI infra companies. And there's a fundamental reason behind it, which is if you own the user, the end user, the consumers, you have a lot more bargaining power against upstream supply chain, right? That's where it's all about bargaining power between the different players within the supply chain. and only the end consumer generally, historically, empirically gives you more bargaining power, more pricing power. So probably in crypto, we're going to see the same thing. However, that trend might take 5 years to a decade to play
Right.
out. So in a short term, yeah, I mean, the crypto infra tokens and valuations are continue to be way more overpriced than the consumer products. But over the span of 10 years, I think it'll change.
There's an article I want to call out that was written by Nick Grossman back in 2018, and it's called "The Myth of the Infrastructure Phase." If you haven't read it, read it. It's very spot on. But ultimately, what he argues is that apps inspire infrastructure, that infrastructure enables apps, and we're going to go in this fortuitous cycle where you'll have these apps, then there's a bottleneck, right? Then you'll see the infrastructure that'll build out to enable next generation applications, and it's just going to be this kind of like sideways, kind of upwards trending motion. And then he also like kind of lays out different examples, right? Some of the examples he lays out is like apps like in the 70s in the 70s is messaging and email. Then you had infrastructure that was built out, Ethernet, TCP/IP, ISPs, SendMail. Then that led to Prodigy and AOL, right? Then infrastructure was built out again, like Google Search, Alta Vista, etc. Then there was a whole next generation of apps that were built on top of that. So I do feel like that is the era that we're in. And I think we're bottoming out on the infrastructure side, and we're starting to slowly kind of go up to apps now.
So, all right, there's a lot I want to respond to there, actually. And I want to come back to this concept of value accrual. And I don't know if you guys have heard of the smiling curve, but I found that actually a super interesting framework. So one thing that I would also, Imran, what I was thinking of when you were talking just there is there's been this chicken and egg problem around, apps and infra. And part of it is that, the infrastructure should be built to support the applications, but we don't really have any runaway applications. So what are we really building for here? And I do think there's a little bit of a trend of some of the best app devs out there who are actually like founders who are building their own underlying infrastructure, right? So they kind of get a little bit of a head start by building an application. And they're like, well, the infrastructure that I actually need doesn't really exist yet. And so they end up building it out. And again, maybe the exact example of the internet era is Amazon with AWS, right? Which is, hey, I found this one little niche, which is I sell books online. Now I sell everything online. And I actually need this really specific bit of infrastructure to support that. And maybe I think my competitors are ultimately going to need that. And I'm struggling to think of examples now, but like Argus Labs, I think is probably a good example of that, which is kind of like a game and then building your own L1 to support it, that type of thing. But
I'd say Hyperliquid.
Yeah, Hyperliquid.
Hyperliquid built out its own infrastructure, its own layer one, then built out a great derivatives platform, and now it's building like consumer app. I mean, like there's a whole ecosystem built around Hyperliquid.
Actually, the DEXs are probably, I think Osmosis even, I'm a little bit less familiar with it today, but I think that's probably another good example of this, right? Which is on-chain Binance, and now it's sort of a platform for, even a lot of the applications themselves. I did a whole season on DEXs with Dan Robinson, actually, and it's interesting to hear even Uniswap views itself as a platform. And if you look at Uniswap over the years, going from UniV1 all the way to UniV4, it looks more and more platform-like each time, right? In the beginning, it looked like a platform because it's got immutable contracts. Anyone can kind of use it as a primitive, but now they like really leaned into that with hooks, right? And the idea is for, hey, we don't really know what the consumer preference is going to be. This is a liquidity primitive, and you can actually do very fine-tuned design features for whatever AMM you want to build on top of Uniswap. And so it feels like there is this trend of app dev, like people starting by building an app, but then also trying to build out the supporting infrastructure on top. But how, like, do you view that as a sustainable thing? I mean, from a founder standpoint, man, that's, you got to be focus, right? I feel like that would be very tough and demanding from an internal resources and focus standpoint. So how do you think about this balance of founders building out the application and the supporting infrastructure?
I mean, you definitely can't do two things at once, at least not in the beginning. Even the Hyperliquid example is one where they built a really, really good, the best derivative trading platform before turning it into a layer one. And if we're going to see more examples of this, they certainly have to start by focusing on one, not both at the same time.
All right, I want to get your guys' take on this like ultimate. This is one of those things that it's just very difficult to predict. But this idea of the smiling curve, and the smiling curve actually was originally proposed by a guy named Stan Shi, who's the founder of Acer, and this was like in 1992, and this was just to describe the supply chain for personal computers. And what he basically observed is if you roughly divided the value chain into three different parts, there's the conception, the manufacturing, and then ultimately the marketing and the distribution. He found that there was value capture at the initial part, which was the conception phase, and that's where R&D happens and patents happen that protect a lot of the value. And then there was a dip in manufacturing, which ultimately was commoditized. But then ultimately to end, the proximity to the consumer and the distribution, a lot of value ended up accruing there as well. And I'm going to share my screen because I looked at, there was a Mason Nystrom, who I believe is at Variant, has actually been sharing around this this Fat App Thesis. And it kind of first of all, it rhymes a little bit with this idea of a smiling curve. It also builds on what I think was one of the most foundational texts around value accrual in crypto so far, which was the Fat App Thesis, which came from Joel Monegro back in 2017, 2018 sort of time frame.
Wait, wasn't it
the Fat Protocol Thesis?
Yeah,
Fat Protocol Thesis. I misspoke. Yeah. Okay. So basically what this says is that, applications are going to capture value. The layer one blockchains are going to capture value, and things that are in the middle, which is kind of on-chain primitives and protocol, those are the things that are going to end up getting squeezed. And I would love to get your guys' take in general here. Does this look roughly right to you? I know, Qiao, you were a proponent of the idea that apps might capture a lot of the value. It might be on a 5-year time horizon. It's very difficult to predict. But what do you think about the rest of the stack below applications?
Well, it depends on what we mean by the layer in the middle. Like, what do we mean by on-chain protocols? And
I'm assuming DeFi.
I'm assuming DeFi. Yeah, I would think that. I don't think this would be like an honestly like an Aave or a Uniswap kind of maybe. And I'm interpreting here from Mason's post, but you could almost look at this like Uniswap Labs versus Uniswap, the primitive, right, where there's an actual primitive for liquidity, but then you can build applications on top of that, like a wallet, right? And maybe the wallet would be the app layer, and which would be represented by equity, and then the token would be represent the on-chain DEX.
I think if we're actually referring to the DeFi protocols here as the middle layer, then I tend to agree. I think most people actually misunderstand how Uniswap actually captures value or manages to be so dominant. I don't think it's the protocol at all. It's the fact that they own the end users. And in order to own the end users, they build like Imran. Remember we talked about they built the mobile wallet. Yep. In addition to the front end, the desktop front end, their brand is great, which brings even more users to them. Their brand is actually better than like all the aggregators on Ethereum, for example. By the way, on Solana, it's different. Solana is Jupiter. Jupiter is actually a very good example of this as well, because Jupiter doesn't own any of the protocol. They own the end users. And no one actually, like, when people think of Solana DEX or Solana DeFi, they don't think of Radium or Orca. They think of Jupiter. Like this, ultimately.
But actually, could I poke at that though? Because there might be a branding element to that, but there's also gas cost, which is super different. So aggregators on ETH don't make quite as much sense because you need to make a number of hops, which just means the gas cost is much higher. Whereas in Solana with Jupiter, that's just not much of a thing, right? You might as well go through an aggregator if the gas cost difference is like 0.001 cent versus 1 cent. But in Ethereum, it could be the difference. Just trading on Uniswap could be, $50 versus $120 or something like that.
I agree with you, by the way. But a related example is MetaMask charging 25 basis points on average on every transaction. Like that is like they printed so much money in the last few years by doing that, and they own nothing of they don't own any of the protocols. They just simply own the end user, right? So if we're talking about DeFi as the middle layer, then I tend to agree with that. Now, but there could be other things that can be considered middle layer, right? Like, I don't know, I guess the bridges, the oracles, the
kind of middleware. Maybe you can
middleware.
lump that whole category in. Yeah.
Yeah.
What do you guys think about L1s?
So, this is where I was going to go get with this. I have a very different thesis. Over time, I do think the Fat App Thesis, I won't say that this will be dominant, but I could see apps owning the entire infra, right? I mean, outside of maybe some oracles or whatever. And you saw glimpses of this already, which is one area that I'm fascinated with, which is the ability to verticalize DeFi protocols and primitives across the stack. And a good example of this is Frontech V2. So Frontech V2 had, they launched on Base, but they could have easily started their own layer 2 as an example. The AMM called BunnySwap was completely in-house, right? And so the tokens that were, or the keys that were launched on Frontech could only be traded within the app. You couldn't trade it outside of the app. The tokens, the Frontech token in itself could not be transferred outside of the app, right? It could only be used within the app. And so people were forced to use BunnySwap, right? And so all the fees that were captured, all the fees that were accruing to Frontech were captured by Frontech and the users behind it. So we could talk about the pitfalls of what happened with Frontech, but ultimately there was something special there with that, right? Which is the ability to verticalize and keep everything in-house. And that could also be a threat to Uniswap. It could be a threat to other AMMs as well. So I do think that is an area where if apps do it right, they could own the entire infra.
I think it's a really interesting question. I don't know, this theory that I've had for a little while is, I mean, even when you look at where if you were to look, and Bitcoin, by the way, might be the exception here. This is the thing that I've waffled the most on is Bitcoin an exception or is it not? I'm probably at this particular moment in time in the camp that it's its own special snowflake and it's basically the ultimate meme coin. And I think it's probably just going to be successful at this point. But the rest of these L1s ultimately are probably competing on some level on being able to retain some of the cash flows that their ecosystems generate. And I guess any way you slice it, every argument that I hear from either the Solana ecosystem or the Ethereum ecosystem, I just see it getting whittled down over time, right? Because even like this whole MEV as a way to value L1s, MEV is going to get recaptured by apps. Yep. Just basically all the app devs, you can see this most directly in like AMM designers. They are laser focused on reducing leakage to the L1. And it's going to be the same thing. There's like Oracle extractable value as well for liquidations. Yeah. All of these little sources of MEV, which were cash flows, which are getting paid to stakers, that's all going to get whittled down, right? And then it's the same thing for the settlement and DA argument, right? Like settlement, it's really easy for me to imagine settlement just getting whittled down over time because you can just batch transactions into bigger and bigger batches is the simple example for L2. So even all this L2 activity, that doesn't mean that people need to buy ETH with it. And especially on L2s, their incentive actually is to allow people to pay in whatever currency they want. And so I just can't really construct a long-term bull case for L1s, actually. I view them much more as like a trade. But I'd be curious what you guys think overall here of like the L1. Like, how do you think about L1 value accrual into the future?
Personally, I don't think about the long term. Like when you say long term, you probably mean
I'm talking like 10, 20 years, basically.
I don't care about, it's impossible 5 to 10 years.
Yeah.
All I think about is what's going to happen at the end of the cycle, right? Like who's going to be the winner at the end of the cycle. Over the time span of 5 to 10 years, like the whole MEV capture theory could very well be right on paper, but it doesn't matter. There's so many other factors in play over that time horizon. And if we really want to stretch the time horizon to the extreme, like call it 50 years, what's going to happen? What matters in 50 years over that time horizon? It's store value. It's not MEV. It's whether or not this layer 1 can become the best store value. And that goes back to whether or not Bitcoin is the exception. I actually tend to think Bitcoin today is the exception, but over the time span of half a century, it could very well be the case that Solana or Ethereum become the best store value because of this whole I don't know, burning the supply with MEV or transaction fees, which Bitcoin sucks at. Bitcoin still has Bitcoin's security budget is still a question mark, right, over
Yeah,
that
it
time
is.
horizon.
Yeah.
So, I mean, on paper, for me, the most correct value capture theory is store value. But again, that doesn't matter. I only think about what's going to happen in 2 years. In 2 years, what's going to happen in Solana is going to outperform everything else. It's very simple.
My only like add on to that is I also think everything is up for grabs for a very long time. Like, you know, Solana may be the winner, you know, this cycle. I feel as if a killer app that's launched on another layer one, you know, it's still, I think it's still up for grabs. And I don't think there's any.
So Imran and I were actually talking about this yesterday. And we were like, I mean, Solana seems to be winning right now, but every Ethereum layer 2 is probably one breakout app away from catching up and dominate. And that one killer app could just come out of nowhere.
You know, what's a pretty nuts chart is the amount of ETH that's flowing up through the settlement bridge into Arbitrum every month.
That's
it is like,
isn't it?
I'm not really sure, actually. I mean, it is the craziest up-only chart, though. It is pretty wild. And I think
you're talking about from ETH to Arbitrum.
Yeah,
right?
ETH to Arbitrum.
You're talking about from Arbitrum to Hyperliquid.
Well, you have to. Well, you use so the way Hyperliquid works is they have a bridge that's an Arbitrum bridge, and all the money flows to that bridge. And so I'm assuming that's what it is.
Yeah.
Oh, interesting. All right, I'm gonna have to.
So,
check on
I
that.
mean, they call Arbitrum the Hyperliquid bridge. So.
Oh, really?
Yeah.
I mean,
not to knock on Arbitrum, but it's what I'm seeing on Twitter.
Those network effects are really powerful. I think for L2s, and that's probably the way the whole L2 argument ends up settling out. Is we definitely don't need 10 L2, but if you probably had like 3 big L2 frameworks, that's probably fine. And they do really good interop in between, you know, within apps in its own ecosystem, and like okay interop, like maybe you have a cross or something like that, which works for, you know, cross chain, you know, swaps, which is probably 90% of what people want to do anyway. That might actually be completely fine. And then it doesn't really feel like.
Who are the 3 that you're most bullish on?
I mean, I think you got to put Arbitrum up there. I mean, Base. It's hard to really distinguish Base from Optimism at this point. I mean, is it its own thing? Probably. And then it feels like there's such a steep fall off after that. Probably, I guess one of the ZK chains. So like maybe, honestly, I could see ZK Sync. Probably. What do you guys think?
I'd say I'd put in potentially Polygon CDK. I mean, there's some interesting rollups that are on there.
And they got Polymarket on there too.
Yeah, I mean, Polymarket. Yeah. Immutable X, and a couple others.
I think Polychain has kind of nailed the architecture. They've got the CDK, they've got their ag layer. I think that that's probably what the future ends up looking like. So yeah, I think they're doing good.
Yeah, I feel as if the roll up infra is going to be, you know, cross chain comms, you know, some sort of ZK element, and then cheap and fast.
Yeah. All right. This episode is supposed to be about consumer investing. I want to get a sense from you guys. You guys have a really interesting seat, right, at Alliance. You guys get to see on the ground a bunch of founders, where they're choosing to build, how they're thinking about things. You get to hear them ideating about their applications and their product years before it makes it onto market. So, you know, without, you know, revealing any state secrets or anything like that, like give us the on the ground view. Like, what's this new cohort of founders that you guys are speaking to interested in, and where are they choosing to build, and what types of applications are they like roughly interested in and talking about?
From a high level perspective, we're seeing some, I mean, obviously Solana and Ethereum. Ethereum's still dominant. Specifically, Base has become very, like, this batch and last batch especially has become heavily invested in. I'd say we did see some on Blast last batch, right before the Blast launch. And then I'd say 1 or 2 on-chain games. One of them is using Redstone, but I'd say it's predominantly Base and Solana.
What are your guys' views on Ton? You know, I want to talk to you guys about distribution.
teams. To
Yeah. So this is interesting. We're recording this week. If we had recorded last week, it would have been a little bit of a different conversation, right? Because the founder, I think Pavel Durov, has been arrested in France on a whole multitude of different charges. And I saw that, I don't really know the details of this, but I saw that Ton stopped producing blocks for a little bit. I don't know if that was related to the arrest, but is interesting. I mean, it feels to me like this is the selling point of Ton. It is somehow related to Telegram. There are a number of daily active users. I've seen huge variance in terms of the estimates there, anywhere from like 600 million down to maybe it's the numbers actually closer to like 5 million actual daily active users. So it's really hard, frankly, to get like good data on this. But I've seen, and if you aren't in the US, they actually have all of this other infrastructure that you wouldn't see as a US Telegram-based user. They have a native wallet and things like that. And so the idea is if you build on Ton, the blockchain, you're going to build on an ecosystem that actually has distribution. How much merit is there to that idea?
So distribution is very easy on Telegram. It was funny. We were talking to one of our founders who's building, who originally built a Web2 game. It took him a year and a half to get 1,500 monthly active users on his game, 1,500. And he did a ton of ad spend on Google, Facebook, Instagram. And he launched the same game on Telegram. And it took him 3 days to get to 1,500 monthly active users.
Wow.
And he was shocked. And so there is definitely something there with the network effects that Telegram has, and which is getting him excited. He in fact said something very interesting, which was, this reminds me of the period where Zynga first launched on, or Farmville first launched on Facebook, and there was this small window of opportunity where you could get network effects instantly. And so whoever wins this like part of this phase of the game of building startups on Ton or et cetera, could be one of the first dominant apps on Telegram. So there is a race to this element. Now, there's a lot of different questions that still need to be answered, which is the types of users that are using the app, right? Are they using the app for purely incentives? Or are they organic users or like organic mercenary users? Like the last one I would say is, can Telegram Ton network handle all of the on-chain activities? Because it tends to be slower and more costly. So now we're starting to see founders build like hybrid infra where most of the game logic is off-chain and some of the stuff is on-chain, just so that they could still use the distribution network of Telegram.
Hey everyone, this episode is brought to you by Namada, the shielded asset hub protecting the future of the multi-chain. Namada is a chain that's near and dear to my heart because in previous seasons of Bell Curve, we've talked about how the cardinal original sin of most blockchains is not thinking about privacy from the beginning, but also because if we want to onboard a whole bunch of applications, it doesn't work in a default transparency setting. So Namada not only brings about a better future that we all want, but it's going to help onboard a ton of new applications. So Namada introduces a novel shielding reward system. The way that it works is if you hold your assets in the shielded set, you help strengthen Namada's data protection guarantees and collect non-rewards in return. Namada will initially support IBC and Ethereum-based assets, but eventually the idea is for this to expand into a comprehensive hub for all assets. Really, really excited about what the folks over at Namada are doing. I highly recommend that you go and check them out at namada.net. You can follow their mainnet launch, which is soon TM. Very exciting. Tell them that I sent you. Click the link, bottom of the show notes. My observation has been that Base feels it almost feels like an extension of ETH culture in the sense that it's really positive and optimistic and on-chain summer and come build here, we're all friends kind of thing. And the Solana community to me has always felt way more pragmatic. Like pragmatic is their kind of word, and they're very engineering focused, and they're a little bit less like that. Does that also ring true or feel accurate to you guys?
Definitely, and both can be traced back to the DNA of the founder, right? Like Vitalik is that Vitalik is very idealistic.
Yeah.
And Anatoly Raj are very pragmatic.
You even saw this in the bear market, right? It's very evident. Like you could see it throughout different parts of the cycle, but during the bear market, the Solana founders were more pragmatic. They talked about chewing glass and, you know, working as a community. Like they just became even tighter. It was very interesting to see that, and they kind of came out of the hole after the bear market, right? Whereas with the Ethereum community, I mean, all I saw was like spreading the gospel, and you know, talking about why Ethereum, you know, they had their own kind of like Bankless was like a large part of it. Different parts of the communities were a large part of it, kind of like singing the praises and etc. But you know, Ethereum also had its own way of like keeping its community happy.
Like this whole drama around like Vitalik criticizing DeFi over the last few days, like you will never hear that kind of stuff from Anatoly or Raj.
Yeah, I think, well, even the Bankless stuff is funny. Like I was looking at Qiao, we were talking about this a little bit before getting online, but I saw this post, you know, not to call anyone out, but it's saying, hey, Bankless has abandoned, you know, Ethereum as a community. And it's like, guys, come on. I mean, it's just a little bit of self-reflection here. Didn't we watch Bitcoin go through this as a community? Didn't we watch them go through this period of stagnation because they drove everyone out that had like one iota of dissent or question? I mean, that's just such a negative.
It's annoying.
Yeah. And it just annoys everyone. Yeah, I mean, you just end up putting those people on mute, and it's like, I'm just going to disregard your opinion now. You know, I don't know. So, yeah, I think there's but I do think also, so here's one thing that I see from new founders that are building L2s or L1s. And actually, Blockworks had a little bit of this when we were deciding on our kind of editorial voice and what do we cover. And someone gave us really good advice on this, because I see a lot of chains try to position themselves. It usually ends up being away from speculation. They try to take this opinion on the apps and say, these are the types of apps that we want. And in their minds, that's their way of differentiating, right? They're like, this is who this chain is for. This is not who this chain is for. Sure. But I don't know. I kind of think that you should really just be like, come one, come all, right? We don't care what type of app you're building. We just welcome any type of app developers and builders at all, because it is so hard to know, especially in an industry where we don't really have any apps with like true product market fit yet, what's going to end up being useful and taking off. So how would you guys advise, you know, these types of app platforms? Like, how should they be branding themselves? Like, what do you guys think about some of this? I don't know. What I would use is kind of moralizing that gets done about certain categories in crypto.
You know, it's a deep side because I'm really disappointed with like some of the Ethereum core people. They actively shy founders away of going in certain areas that they don't like, especially the stuff that are not aligned with their ideals. And like I said before, like all these layer 2s are probably one breakout app away from dominating.
Yep.
It's just sad that they're shying some of the best founders away.
You know, like you see this also like from an ideological perspective. You know, like the ETH Foundation giving a grant to Uniswap, if you remember, and that was the only grant they gave because they didn't know that Uniswap was going to become a commercial startup, right? They thought it was just going to be a decentralized protocol that would give away fees and just offer the service. As soon as they found that out, they wanted nothing to do with it, right? And they didn't. And even if you look at the grants and the types of grants they offered, they tried to stay away from that. Also, like if you look at like Autonomous Worlds, which is like an on-chain MUD framework where you can build on-chain games, they just released a layer 2 on like a layer 2 infra for Redstone, which enables anyone to build on-chain games, and it's very specific to on-chain games. They also shy away from speculation, right? And right now, on-chain games is primarily just to play games. Like Dark Forest was one of the most popular games, but there's nothing with speculation involved in Dark Forest, so it quickly fizzled out. And so now the meta is, you know, could we take on-chain games, which has been kind of this niche community, and make it more speculative? And it's gaining more and more community members and users that are using it and finding product market fit. So, you know, and they're shying away from it, like Autonomous Worlds and Redstone and et cetera. And the question is, should we be embracing it and like bringing more users to use the products? Because this is one reason why retail likes to play these games, is the speculative element. And so you could kind of see this within Ethereum Foundation's DNA. They just want nothing to do with speculation or or tokens or anything of that nature.
I've sort of wonder, how many people do you think came to crypto and then they ended up rediscovering finance? Probably like a good number. I'm in that bucket, right? Like I didn't have a financial background before coming to crypto. And I wonder if some of the allergic reaction that people in crypto have to speculation is actually just more of an allergic reaction to how finance actually works underneath the hood. And I think one of the reality of financial markets in general is that it relies on speculation and gambling. Like a great example of this that I always like to give is the 30-year fixed rate mortgage is not an animal that you find in the wild. The reason why banks can offer fixed rate mortgages is because you have a bunch of degens who want to gamble leveraged on interest rates, right? Like that's the financial alchemy underneath the 30-year fixed rate mortgage is a bunch of people just degenerately levering up and betting on interest rate swaps. I mean, that's what that is. And so I get it, but even the Ouroboros comment, from Vitalik is like, where does the yield come from borrowers? It's like, that's how finance works. Finance is circular. It is circular.
Outside leverage is way, way higher than crypto leverage.
Right.
And they can bring the entire economy down.
Yeah.
Yes.
Yes. And a lot of people have a problem with that. But hence, I think the allergic reaction is less a crypto specific thing than people just rediscovering these principles of finance that have existed for a long time that they might have been ignorant to.
The other thing is, like, people always say, okay, well, the S&P 500 goes up because there's a real economy behind it, blah, blah, blah. The reality is the US stocks is actually, in the grand scheme of financial markets, is the exception, not the rule. US stock market is effectively the only stock market that goes up only. Yeah. Look at all the markets in the rest of the world. Like, look at Europe in the last 20 years. Look at Japan in the last 20 years. Look at China in the last 20 years. China economy has been up only, and the stock market has been down only. Like, it's absurd. Like, Americans should feel extremely lucky to have the stock market that actually goes up. And like everywhere else, it's a pure casino.
Have you guys seen the chart of the Nikkei? This is one of the wildest charts. Here, I'm going to share it here. It actually just recently broke the all-time high that it set back in the 80s. But this is one of the craziest cup and handle Like, look at this.
Oh, wow.
Yeah. This was over 30 years of dead time, basically, where, there was that crazy bubble back in, I guess it peaked in, 89 or 90, and it just only recently broke out to new all-time highs. So, it can take a long time. And, I guess my question to you guys is on this speculation bent. Qiao, you had a quote a while ago. I went back to look for it and I couldn't find the exact wording, but it was something along the lines of people in crypto tend to focus on all of the things that crypto can't do as well. Blockchains can't do as well as their historical, counterparts, but it doesn't focus as much on the one thing that it can do super well. And the analogy you gave was mobile, right? There's a mobile wave, and everyone used to say, well, the screens aren't as big as desktop, you can't do as much stuff, but the thing that mobile really nailed was the convenience factor, right? And everyone just underestimated how much people were going to be glued to their phones going forward, and how, even now, I regularly will sit on my couch and watch something on my phone when there's a TV there just sitting off. I don't even know why I do it. I just, maybe out of habit more so than anything else, but what do you guys view, listening to you guys talk and trying to intuit your opinion here, it seems like you guys view speculation as one of the, core things that blockchains enable super effectively. Am I right or wrong? Or what are some of the other, superpowers that are going to end up being, the alchemy for consumer apps?
Like, I think speculation is obviously by definition not unique to crypto, but what crypto is really good at is creating new markets that didn't exist before. Meme coins is an example of new market.
Yep.
The creator tokens, like with Iggy and all these rappers in the 2 months ago, right? Crypto is really good at creating new markets. Crypto is also very good at payment, both in terms of cross-border payment, but also micro payment, like the ability to send small amount of money, and which is effectively impossible with credit card because they charge a flat fee. And if you really think about it, everything that worked so far in crypto is downstream of these two things, including, for example, DePIN. If you really think about what DePIN is, it's creating a new market and it's micropayment. The very idea of incentivizing people with a small amount of token, that in itself is micropayment. So, I mean, so far empirically, these are the two things that crypto is really good at. And they're sitting at the two opposite extremes of the spectrum. One is like hardcore degen, and the other one is like no speculation whatsoever.
Yeah, I'd agree with that. I mean, you have other interesting, tech that can enable like some features. So like, with ZK, you can enable, like hiding identities in a dating app, or if you want to do ZK TLS to verify off-chain data on-chain, stuff like that. But I think that's going to be a part of a bigger app. It isn't going to be a product in itself, is the way I see it.
We're incubating a number of apps that people haven't even thought of.
Yeah.
But these app ideas are fundamentally downstream of the two broad ideas we just talked about.
Creating markets and micropayments. So I saw you tweet this out, and I heard this from her name, Brother Bing, one of the Mega ETH founders, that there was this kind of graveyard of 2017 era ICO ideas that might be worth revisiting. This is something that I heard one of these big VC, it might have been Fred Wilson or one of the A16Z guys talk about, but there was actually a game called Dot Bomb back in the day, and it was making fun of every failed idea from, the .com bubble of the 90s, early aughts. And and it ended up being all these ideas that ended up working later, right? It was, pets.com, but then you get Chewy and that type of thing. And I forget, there was an Uber, it was like Webvan or something like that ended up becoming Uber, whatever. So all these failed ideas. And, I saw you tweeting about like earn.com actually as a relatively interesting idea. I mean, that also feels like it's downstream of the micropayment part of it.
Earn.com is micropayment. And one of the fundamental reasons why it failed many years ago, it was because blockchains were actually very expensive to use. Bitcoin was very expensive and very slow to use. So micropayment wasn't in all practicality feasible at that point. But today it is. Like micropayment wasn't even possible 2 years ago because there was no Solana, there was no layer 2s. But today it is. And people haven't spent enough time, tinkering around these ideas.
I wonder if it's possible that around some of the categories that people were really excited about, it's going to end up, the value is going to end up manifesting in sort of different ways that we originally expected. And the example that I might give you is on-chain gaming. And so everyone kind of took this to mean that every action in the game needs to get translated into a transaction that happens on-chain. And I think if you really look at that logic, I don't see it. I don't really understand why there's any sort of commercial incentive to do that. But integrating micropayments into games is super useful, because if you've ever been a little kid who's a huge nerd and liked to play a lot of Xbox or any of these games, getting your mom's credit card for something was a huge friction, right? I mean, it took forever. It's like, what are you buying? That's $7. Absolutely not. And so I think that honestly, getting young kids on games where you could reduce a lot of the friction and not make them have to have a credit card, that type of thing, that's the sort of weird intersection that I could really see hitting down the line.
Like the idea of putting all the gaming logic on chain. I'll give you the argument for. The argument for is be able to enable people to create mods on top of these games, to fork the code and then create new versions of the game. And if you really think about it, I put the idea of on-chain gaming in the same category as data sovereignty, data ownership, permissionlessness, composability. Like all these things will matter at some point, but it is not the carrot that will get users excited in the beginning. In the beginning, it's about speculation, it's about micropayment, potentially, like the things that you mentioned. So we need to give the users what they want initially, and then at some point, eventually, these ideals, these idealistic things like composability and on-chain gaming, all these things can matter.
So like our internal thesis is what Qiao talked about the first part, which is like speculation. speculate. Like the reason why I got into Bitcoin was that I discovered Bitcoin very early, and I'm like, oh, it's only like $200. Like maybe there's something there. So, and I think most of the people came in for those reasons, right? And then obviously then you discovered all the other things that crypto can enable. So similarly, I think the ideologies that Vitalik and many others are talking about is still in fact true. We don't disagree with it. I just think it's a timing issue. And really, and I think over time people will be much more financially aware of of what their money is doing and how they're going to spend it and what products they should use and ideologies, right? So I do think all of it matters. It's just a timing issue. And our Trojan horse into the world is going to be speculation. But then, why they'll stay into crypto is because of all of the decentralized ideologies that we have.
Yeah, I think I was on a Bankless podcast like a year ago or something, and I've heard them ask this question a couple of times. Like, what if this next generation of people coming into crypto don't care about the ideology that we do around decentralization? And I think my answer to that is that they shouldn't have to. They're not gonna care. They shouldn't have to, because the tech should just be built in such a way that it doesn't end up mattering, right? You offer something really useful and you Trojan horse people in. This is also the really classic thing that we see happening, right? Early adopters, super ideologically motivated, no reason for people to be using Bitcoin or Ethereum in the early days. Then actual improvements gets made, trade-offs end up happening. You offend the early ideologists and they kind of churn. And then the next generation of like slightly more pragmatic people come in. Aren't we just living through something? This is like the most classic thing ever to live through. Yeah. This is all happening exactly the way that you might expect it. Yeah. If you're reading about it in a book. All right, so let's talk about this next generation. I want to get you guys just put out an episode. You did a couple great episodes with the founder of FanDuel, but also on Gen Z and Gen A, Generation Alpha. Sorry, that's very Ohio of me to get that wrong. Oh my God, if anyone's actually Gen A on this, they're going to be like, Jesus Christ, that was cringe. Boomers. Freaking boomers. Okay, so here's my question to you guys. Do you think that that's an important channel for people coming into crypto? One of the other trends that I see a lot is streaming. People do stream, like Imran, I know you were talking the other day about the stream that happened, and there was a guy maybe doing a little bit of drugs, maybe hanging out with a lady in a slightly lewd way. But there was actually a prediction market that kind of went along with it. And talk to me about this whole, like the TikTok streaming, and where does that intersect with the industry, if at all?
By the way, I'll give you my version and then you can give yours. Okay. The streaming part is actually ties back to micropayment. If you really think about the current streaming platforms where the fans tip the creator live, but you know how they tip today? They buy some gifts, like virtual gifts, and they send those gifts to the creator. And there's actually a couple fundamental reasons behind it. But one of the reasons is it's actually impossible to do micro tipping today with credit cards because these are so expensive. So the whole virtual gifts as a way to tip is effectively a layer 2 if you think about it. It's a layer 2 for tipping. Like these gifts are in this sort of centralized database where the transactions happen from the fan to the creator. And then at some point, once the creator has accumulated enough gifts, they can settle back to the layer 1. And the way they do that is to basically cash out, right, from TikTok. So micropayment is one of those potential intersections. But Imran, you have your version.
Yeah. If you think about it, the new generation, Gen Z, Gen Alpha, they're more entrepreneurial. Like if you just talk about, obviously like the millennials and others will see them as lazy, which is exactly how the boomers thought of us. And so what's interesting about them is that they're lazy in the sense that they don't want to work like a traditional job, but they're smart enough to figure out how to make money. And so there's a really interesting stat around like watches. Like it turns out watches are, millennials don't buy watches, they don't sell watches, they don't really wear watches, like high quality watches outside of a few. But the data indicates that Gen Z, they buy and sell watches all the time. And they do that for profit motives, right? Like to make money, which I thought to be very interesting. Creators. So I asked my nephew, who's 16 years old. So like borderline Gen Alpha, Gen Z. And I'm like, what do you want to do when you grow up? He goes, probably streamer. I'm like, why? He goes, well, I just want to hang out with my friends, make money. Like, it's just something that it came out like naturally. If you asked me when I was like 17 or 18 years old, I'd say like some regurgitated bullshit answer, right? Like a doctor or engineer or something like that.
Yeah, lawyer. Yeah.
Yeah.
You know who would have been very well suited to this generation is my co-founder, Jason Yanowitz. I've ever told you guys about our ticket flipping scheme that he got me into?
No.
Dude, I lost so much money chasing investments that Jason recommended to me over the years. So he had a buddy who did this thing. Have you heard about like the botting thing for Ticketmaster where the bots will immediately? Yes. So he had a buddy who was running one of these businesses and making like 80 grand a year doing this. And this was, we just graduated college. Like, shit, that's a lot of money. And when his buddy gave him this tip about these tickets to buy, this was for a Jerry Seinfeld live show in Manitoba in February. But he's like, sure thing. I was like, I'm in. Bought like $1,500 worth of Jerry Seinfeld tickets. Waited until the end. Couldn't flip it. Couldn't get anyone to go with me. Lost $1,500. Trying to flip Jerry Seinfeld tickets. Yeah. So anyway, Jason.
Well, that also tells you that Jerry Seinfeld is more skewed more older now, right? So like it's the older generations.
He's going through a little bit of a bad arc, I feel like. There was a little bit of a who is the Brady Belichick with him and Larry David, and I feel like
Larry David hands down
came out on top on that one. He kind of comes off as a little bit of a crotchety old man now, I think. He's like old man shakes fist at cloud type vibes at the moment. But I lost my train of thought here.
So I was talking about the archetypes for Gen Z, Gen Alpha. So they're entrepreneurial. They'll figure out, they want to find ways to make money. So sneaker bots isn't one. Like it turns out one or two of our founders that came into Alliance was because they first built sneaker bots. We're talking Gen Zs, and then they started doing it for NFTs, right? And then NFTs, and some of them pivoted to, which I know this for a fact. Like the founder of Photon, which is doing about 300 million in annualized revenue, sniping different pools on Pump as an example. They built an NFT bot before, and previous to that, you see kind of that lineage of founders, right? So I do think that they have a very interesting viewpoint as to like doing less physical mental work and easier way to make money, and that ultimately attributes to finding a great startup or product to build, right? And so streaming is one, right, as an example. And sorry, go ahead.
So here's one thing I was going to ask you guys just about these platforms in general. Here's advice that people have given to us over the years is you guys got to be on TikTok. I think, Qiao, you actually said this last time we were in talking. Here's the challenge with that from my standpoint is that the content has to conform to the medium. And so when you think about the type of content that's going to do well on TikTok, like, probably everyone listening to this scrolls Instagram or TikTok at some point. You got to do like kind of funny type stuff. And that doesn't really work with our content. We are naturally more financially minded. And I just think the type of stuff, by how much you'd have to transform something like this podcast to make it actually rep on TikTok, everyone who's part of the core audience would be like, that's extremely cringe. And I guess I'm just using this to ask a business challenge for Blockworks. But this is always the challenge when it's like, we'll reach out around these like Instagram or TikTok platforms. That's where the audience is. But I feel like it would just be challenging because you have to transform the feel of it so much. What do you guys think?
I haven't seen any crypto content really take off on TikTok at all.
Yeah. I think there's a reason for that.
It's niche.
It's really niche. Yeah, it's really niche.
But when it does, it's the sell signal. It's the top.
Yeah.
But yeah, so going back to streaming as an example, we do feel like there's going to be interesting applications that could be built around streaming. So Pump was an example, right? Which had 6,000 views of a guy that's doing, drugs or whatever.
or whatever.
I'm just going to leave the rest under the whatever. Yeah.
And you can find out on the internet if you want to find out what it is.
But okay, here's my thesis on that, right? Like you have, and we talked about this on our last pod, Qiao, but you have YouTube and then you have Twitch, and and they have a very high standards in terms of service. So anything you do, you get kicked out if you repeatedly do it. So that's happened with major streamers, right? Like Ad and Ross is an example. He got kicked out of Twitch. So then Kick.com like signed a deal for like $20 million to just stream, but you could pretty much do whatever you want, right? And so that's like the next level. But really, like pretty much what you could do is just like curse and talk about stuff, right? But there's this new area of content, which is like being yourself, complete degeneracy, which is where I think Pump is starting to hit. I wouldn't say product market fit just yet, but they're starting to hit that angle, and then they could slowly work themselves up to the Kick, right? As an example, which is interesting, right? And then we have other streaming apps that we're working on where you can create prediction markets, et cetera. So there's a lot to do with streaming, and I think we're just starting to scratch the surface.
So I think this would be a very far out sort of bold prediction. And I don't think that we're anywhere close to this, but I do see a marriage down the line in between crypto and media in some way. And here's what I'll paint you as a picture. The opportunities that I think crypto is going to do really well on are the areas where there's institutional crumbling or lack of trust, right? Like still to this day, probably the best use case is just money. This is something I think the Bitcoiners got right. That probably is the biggest single use case for this stuff. But another huge area is media. And by the way, I don't think that's because the media is evil or there's some sort of conspiracy theory. It's because their business model has imploded. They just got smoked by social media. Just look at the amount of dollars that used to go to publications. Now it's a smiling curve, right? Like it goes towards the people that have access to the end users, which is Facebook and Google for the most part. And so they're just getting their business model imploded. And there's this negative reinforcing cycle of, okay, well, we don't have as much money to pay the talent. So the talent is going elsewhere and they're just losing it. They're just imploding, I think. So there's this negative reinforcing cycle. But a part of that is media lost access to first party data. So now you don't have access to who's actually consuming your information anymore. Google and Facebook has all that. When you look at token addresses, that looks a lot like first party data to me. And just as an example, let's say we were advertising, I want to target someone for permissionless as an advertisement. Is it useful for me to go on Facebook and try to narrow in your age or what city you live in or how much money you have? Or would it be more useful if I was targeting a bunch of addresses, like crypto addresses, and it's like, how many times did you trade on Uniswap in the last 30 days? That has 100 times more signal for me as an advertiser than anything else. And then you kind of look at these, Qiao, I was looking at this tweet that you said around, tokens are the new content, buy button is the new like button, market cap is the new engagement metric. And it is, I can kind of see these things floating around there. It's like meme coins do look a little bit like a decentralized market-based algorithm. And NFTs do look like it's this very close, tight-knit community. And it feels like there are the building blocks for new media being built around, but no one has figured out how to combine them. And maybe streaming and, Gen Z and Gen Alpha are like a part of this story also. And maybe prediction markets are too. But I can see media being a big use case down the line for crypto.
100%. Going back to Pump.fun, it was interesting when the guy that was chatting with this community, he would say, "Hey, chat, should I do this?" And the chat was asking him to do something else completely different, and he wouldn't do it, and the price started to kind of go down. So there is this relationship.
So funny.
I mean, what the chat wanted to do was, it shouldn't be done anyways, but but there was an interesting dynamic between the token, the chat, and the creator. And essentially the token is the weighing machine as to what the chat wanted to do. And so I think you're spot on to see that, which is I do think streaming and crypto and at large media is going to become a large part of crypto. In fact, we have another startup we're incubating called thelive.bet. It's still under stealth, but essentially you could copy paste any streaming link onto this app, whether it's Kick, YouTube, TikTok, whatever. You copy paste the link, you could create unlimited prediction markets on it. And so there's a way to get closer to the creator in such a way that you could speculate and you could bring other people and tie a closer bond. because what people are saying, the feedback we received from people that are in these streams is the fact that the chat, there's no way to communicate with the streamer nor the people because it goes 100 miles per second. So having a more of an enclosed group, I think, is where the trend is going.
I'll give you an idea to think about. I don't know where the future lies, but there's I realized there in the last few months where I discovered new viral internet memes on Dex Screener rather than TikTok or Twitter. So the first example was Haktua. Michael, you know Haktua, right?
I do.
No?
I'm familiar. Yeah.
Well, I didn't know. So Haktua first emerged on TikTok. But I'm not on TikTok. Like I probably look at TikTok every day, but I'm not like spending like an hour or something. I probably spend like 8 minutes. So I don't come across all these memes all the time. But that day, like within the first 2 days of that meme coming out, I was on Dex Screener. I saw one of the most active meme coin on Dex Screener in terms of trading volume, and I saw Haktua. I was like, what the hell this is? So then I went on TikTok and searched for it. Then I found the meme. So if you really think about it, what's happening is you have these internet phenomena or viral memes that emerge across from different social media platforms, whether it's TikTok or Twitter or whatever. But currently, there's only one aggregator of all these informations. It's like the meme coin, because the blockchain is open to everyone. It's not a walled garden. So like there's like new phenomena like this that I'm seeing that ties back to what we mentioned about there might be an intersection between media and crypto.
That's what I think too. And the meme coin stuff is, I don't know, whenever something new, there's something new, you just want to make sure that it's not a nothing burger. Like if it wasn't evoking any sort of emotional reaction at all, you'd be a little bit concerned about it. But the fact that it has such strong supporters, guys like Murad's coming on the podcast in like a couple weeks actually. So I enjoy, because he did a hardcore conversion from Bitcoin Max.
I was going to say that you should ask him about the conversion from Bitcoin maximalism to meme coin.
So I was there. I listened to him. He did this really great podcast on the Pomp. We helped spin up Jason and I in like the very early days of Blockworks worked with Pomp. And one of the first episodes that were recorded was this 3-hour banger on Bitcoin with Murad. And now I haven't, I kind of lost touch with him over the last couple of years, but then he just came back, has been meme coin pumping. But the fact that it's inspired such positivity and such negativity, I think makes it worth looking at. And even NFTs, I might be on my own little island here, but look, the reason I'm still bullish on these things is because I have an emotional connection to and if like you will tear my bad kid, PFP out of my cold dead hands. And when I look at some of the founders, the guy who I really respect here in terms of his sort of vision and a guy who thinks about distribution is Luca Netz for Pudgy Penguins. So here's, how would you guys, maybe in starting to close down here, we started off by saying maybe there was a competency that some of the early, crypto VCs that have been here for a long time, it's a muscle they don't necessarily have yet, and just a competency they'll need to build up around consumer and growth and distribution and things like that. What about founders? Like, how do you guys see the makeup of a classic founder changing over the course of the next, 5 to 10 years?
So, this ties back to the earlier discussion around infra versus apps. I think there is some fundamental difference between building infra and building apps. Infra is, relatively speaking, lower iteration frequency, whereas app is like you have to, release a new version like ideally every week, and constantly try to figure out, the quote unquote the truth about the users. So app founders, I don't know if there's a fundamental difference between infra builders and app builders, but certainly we encourage the app builders to iterate a lot faster than infra builders. Again, like this goes back to that comment that one of our infra founder made, which is that infra is more of a closed-ended problem, whereas app is more of an open form problem. And the open form problem requires higher iteration. I think about the founder characteristics. obviously the infra founders are very technical. The app founders, the ideal profile is someone, Imran and I were talking about this, but is someone who's autistic and went through
or childhood trauma.
And it's not or, and it's autism and childhood trauma. So
I can give you a perfect example of one too. So after you finish,
I mean, almost every founder that we back that's on the app layer that's built something that people love, it has the combination of these two.
It was funny. I was talking to, I won't name the name, but one of the consumer founders we're working with, and like if you look at backgrounds, like not really prestigious colleges and stuff like that, and they have a chip on their shoulder, right? They have something to prove, and when they see other guys that are more technical come into the consumer space, there's a fundamental divide between like folks that are building infrastructure versus consumer. At least the consumer guys I've talked to despise the infra guys, and they despise Ivy League schools. They despise all of that. Like they tell me this, and I think I think the archetypes are very different.
Yeah, I think so too. I think also for founder, I have no idea. I'm talking out of my, but I have been hearing recently, and something I've sort of thought about a little bit as well, that I think the death grip that the Ivies had for so long on this is where talented people are coming out of it's at risk. I'm not going to make some hot take that it's like, oh, it's a bad thing. It's definitely not. I mean, I'm sure the matriculation for those schools is still top tier, but it is a little bit of a different attitude of people that come out of, and I do think that in crypto, it's like Waterloo. I think Qiao, maybe you went to Waterloo in
Waterloo is a school of plebs. It's not an elite. It's not the.
You know what else? Georgia Tech is another really good example of that. Georgia Tech is goated, and I think there's it's kind of a hungriness, and for founders, what makes you successful is not like an intelligence thing at all.
It's not resilience. It's grit. Domain expertise.
About things differently.
Yeah.
Independently and critically.
Yeah. Also, the ability to withstand extreme emotional duress and volatility. Volatility is probably better, but for long periods of time, All right, fellas, this has been really fun. For folks that want, and if there are any founders either on the infra side or the app side, and they're interested in learning more about Alliance or following either one of you, what's the best way to find out, learn more?
Alliance.xyz.
Tweet. Okay, easy. All right, guys, this was a ton of fun. The next time we do this, I swear to God, we're gonna have a studio. We're gonna do this in person. Maybe, what I think would be really fun is to do it on like a Friday with some beers, just like a more even relaxed kind of. I think that'd be a good vibe.
Maybe while playing poker.
Yes. Yeah. Maybe while playing poker. Yeah.
And on a fun note, Durav has been released.
Oh shit.
Let's go. That's great. Excellent. Okay. I actually saw that the UAE, now we're really departing from this, but I saw the UAE was withholding 80 planes in some sort of contract or something like that.
$18 billion.
Yeah. Yeah. So
money talks.
Yeah. Money talks, baby. Yeah. All right. Guys, this was a ton of fun. We'll do it again soon. Cheers. Hey everyone, hope you all enjoyed today's episode. Want to give a final shout out to Namada. Again, a team that is near and dear to my heart. They are building the Shielded Asset Hub, which is protecting the future multi-chain. Talked a little bit about how that works in the mid-roll, but for now, what I would highly recommend that you do is go check them out. They're in their mainnet launch phase. You can follow along with everything at namada.net. You can start rewarding yourself by shielding your actions and strengthening data privacy for all across the multi-chain. So thanks again, Namada, for all the great work that you're doing.